Okay, let's start the session. Okay, so good afternoon, everyone. Thank you for joining us today. I'm Sarvesh Ravna, and I'll be your host for this session. It is an absolute pleasure to welcome you all to this session, where we will explore the dynamic and ever evolving world of financial services and lending. Today, we are honored to have with us Mr. Tushar Bhayana, a visionary leader at Sassin International, a company at the forefront of redefining the lending landscape both in India and globally. With extensive experience in financial sector, Mr. Bhayana has been a driving force behind innovative solutions that foster financial inclusion and empower undeserved communities. His expertise spans diverse markets, enabling him to offer unique perspectives and draw compelling comparisons between lending practices in India and other countries. So, guys, get ready for an engaging discussion that promises to shed light on the challenges and opportunities in the evolving world of finance. So, without any further delay, please join me in giving a warm welcome to Mr. Tushar Bhayana.
Thanks. Thanks, Avesh. Thanks for the lovely introduction. And I'm honored to be here. Uh, Honored to be interacting with the young minds here. I,
Mm,
what I understand is, I think a lot of you are pursuing your undergrad, and I think you are in first or second year of your college degree, right?
yeah.
Great, great. Cool, yeah. I really hope to have an interactive session, and hopefully both of us benefit out of this after this 1 hour. Right. So I think let's start. Let's start with the presentation. Uh, Sonali, if you can present or somebody can present from your side. Uh, Sonali, can you go to this again slide, please? Uh, okay, this is a changed slide. I don't think you have the updated one. Can I send you the link? 1 second.
Sure, sir.
Okay, I've mailed you the latest link. Just present that. In the meantime, let's start with some thoughts till the time Sonali is presenting the latest one. Uh, okay, so let's talk about lending. Okay, uh, how it's a question to all of you. How old do you think lending as a business has been there for eternity? How old is the business? Any ideas? You can ping your answers on the chat also. Okay, I'm not getting any responses. Lending, I'm not. 12 years is too short a timeline. Manthan, 2000 years ago. Yes, that's a little more like that. Any other response? Cool. None other. Okay, so lending. If you do a little Google search, lending has been there for almost since 3000 BC. It's like one of the most primitive businesses ever, right? And lending by essence is very simple. You give money to someone, and you take that money back from someone with the cost of capital. Like there's some interest that you take on top of it, right? So if it's so simple, then why are we even discussing the advancements and all that, right? So giving out money is not a problem, right? You can go out to the streets, you have some bunch of money, you can keep on distributing the money to people. That's not lending. That's charity, right? Lending is when you decide, and here's what the crux of the problem lies. When you need to decide on whom do you want to give to, right? How do you want to give to, and how do you ensure that you get the money back, right, without incurring losses? And the entire technical advancement that has happened in this region, in this area, is around this, right? You see, and you'll hear some words now in the presentation, like underwriting, risk assessment, fraud detections, etc., etc. That's just basically where all the entities, all the industries are trying to understand whom they lend to, right? And how do they get the money back? That's primarily two basic core ideas that I want you guys to take forward, right? While I present my ideas over here. Sonali, did you get my link? Were you able to open it?
Yes, sir, I'm open. Maybe can I just start with the word cloud, then proceed with the slides?
Sorry.
No, can we just first proceed with the word cloud, then proceed with the remaining slides?
I'm not able to hear you.
Am I audible?
Okay. Cool, Sonali. By till the time you presented. So basically, just to give you an idea, the topics, how the flow will be for the presentation today. So I'll be looking at the traditional lending process, right? Was taking a sample lending journey. What are the challenges that people generally face in that? How tech is trying to solve those problems, what are the latest advancements, and what are the implicit issues when we do too much technology, basically. Right? Perfect. Thanks, Sonali. Let's go to the next slide, please. Yeah. Is it possible to zoom in a bit? No, that's fine. Let's keep it this way. I'm not sure if you would be able to kind of try and zoom in your screens. So this basically talks about a sample personal loan processing journey that happens during the lifetime of a loan processing, right? If you look at the first block, it's basically the borrower goes to a bank. He fills up an application form. Then the bank asks for an ID proof, which then the borrower furnishes in a simple physical document. The bank does an OSV. OSV is original, seen, and verified. They say, okay, I've seen the original. This looks great. They take a photocopy of it. Then they look for an address proof. Then they ask for an account statement. Post that, bank gets certain data. Okay, I understand this person. I understand his financials. Then the bank proceeds to underwrite the loan. Right? Underwriting is where the bank decides, or the lender decides in general, how much money can I give to the person, depending upon what the ask is. At what rate can I give the same to the person, and what is the tenure for which I can give it to the person. Very simple, right? And then post this, bank then needs to decide on the collection mechanism also. Remember, I talked in the beginning of the presentation. How whom do you give to, and how you get the money back, right? So here's the part of how to get the money back. Bank decides on the collection mechanism. So now once everything is in order, right? Bank has decided on how do you get the money back. Then bank finally disburses the loan, which is basically sending out the money to the borrower, right? And then once that money has been sent out, then based on the collection mechanism that has been set up, bank goes and try and collect that money back, right? It could be on a monthly payments, it could be in a lump sum payments, depending upon the lending product as we say, or the lending asset class that we say, that the bank has given the loan for. And this is basically with your EMIs are, or easy monthly installments are, right? And then once the money is taken back, right, the bank goes and updates it to the credit bureaus. Credit bureaus are nothing but online platforms which maintain the repayment history of a person who has borrowed anything, right? So yeah. So let's say, so you would have heard of CIBIL or Equifax or something like that, right? So CIBIL is nothing but it says, okay, let's say Tushar has taken a loan from bank XYZ. How has been the repayment history of Tushar, right? So that if I go to some other bank, right, then that bank ABC would be able to understand that this person is a lazy payer, is an active payer, or doesn't pay at all. Right? That gives you guidance, guardrails to that person. And then, and one thing that was once all this is done, then the bank needs to maintain, okay, how much money has got back, what is the life duration of the tenure of the loan that remains, etc., right? Which is called the bookkeeping or the books and ledgers keeping, right? That's also something was done traditionally on very traditionally was done on your traditional books and ledgers, basically very literal terms, bahi khata bolte hain jisko, and or was done on Excels in a very recent terms. Okay? Good. Can we move to the next slide? Cool. I'll take an example here, right? To just give you all of you some context, right? So let's say a Swiggy rider wants to start, right? Wants to start his job. He wants to purchase a vehicle to start. So if you look at the earlier mechanism, right? For a vehicle loan, let's say this person comes from a very poor background. He wants to purchase a loan. There are chances he would have been rejected on the loan first, right? Because he doesn't have sufficient documents to give, right? Then there are multiple processes, there are multiple checks, etc., etc., etc. Then this entire process would have taken months for that person to get a vehicle loan and be on road to start earning some income, right? Now, with the current scenarios, this entire process takes minutes, not even months, not even days. So Nali, can you press the next button? This is the beauty of, just go back. This is the beauty of the advancement that we have come so far in the lending business, right? And in my journey only, I started my experience in lending journeys at Incred around 2017, right? That was a time when, this was pre-COVID era, right? That was a time when the technical advancements were not so great. Right? We actually had, we actually had loan processing timelines of competitors and everyone, where we understood that it took around 1 month, 1.5 months, or 2 months of lead time also. Now at post-COVID era, we have seen that change happening, right? Now it takes like 2 or 3 months or maximum 2 or 3 minutes or maximum 5 minutes for the money to be out of the bank from the lender side, right? Let's move to the next slide, please. Cool. So this is how, this is an extension of what I just spoke, how traditional lending operated, right? Very in-person process. Someone has to be there, fill up the application form, etc. There's heavy documentation involved, paperwork, income proofs, collateral, etc., etc., etc. People get mad while trying to meet all the documentation, and physical collection mechanism. There have been instances, people getting calls, give the money back, some bad things happening there. So this was basically how the traditional lending models used to operate, right? To the next slide, please. The challenges because of the way how things used to be. This used to be very urban-centric process. Mostly very urban centers used to get privilege to lending. Semi-urbans, tier 2, tier 3s, rurals they were kind of left from getting access to any credits. Prolonged timelines, you would have guessed, as I said, months together to kind of have a loan approved. Cost inefficiencies. So when you are processing all those physical documents, you are asking people to get the documents multiple times, right? Your OpEx increases, operational expenditures increases, right? So in that case, what limits the lender is to give short-term loans or very small loans where they do not earn a lot, right? And this is where basically you kind of leave the rural sector out completely, right? Because they are looking for loans which are like 5,000 rupees, 10,000 rupees for 2 days, 3 days, right? If you have so much inefficiencies in the system, you are not ready to bear the cost to run a 10,000 rupee loan. You would want to give loans which are, let's say, minimum 1 lakh rupees, 5 lakh rupees, or 50,000 rupees, uh, depending upon the pricing that the borrower agrees to. Then this the entire thing was very fraud prone as well. Where I talked about getting physical documents for ID proof, for address proof, etc. Right? What stops me from taking Sarvesh ka Aadhaar, putting my uh, photo on top of it and saying I'm Sarvesh, right? And this has happened many a times, and that is why there have been fraud control units set up in almost every organization, every lending organization that is there, right? And then subjective credit assessment, because let's say I don't know Sarvesh, right? I know okay, he's a person, he studies, right? But I don't know his history till now, or I don't have access to his actual account statements. I may not be ready to take a lot of exposure to Sarvesh. With exposure, I mean, I would not give a loan to him at 12%. I would give it to him at 20% because I have to keep my risk. I have to keep myself risk covers, right? So Sarvesh has to pay me a lot more interest because I cannot access required documents for him in a timely manner, in a cost efficient manner, right? Cool. Let's move forward. Sonali, there was a. Okay. Sarvesh, do you still have the link with yourself?
Yeah, I do.
Cool.
For the questions,
For the question, yeah.
just a second. Yeah.
Right. Cool. So this is one question, just to have understanding how people are receiving these things. How do you think, and where do you think there's a scope of improvement in the entire lending journey from a tech perspective, right? Where do you think tech would act as an enabler in the entire lending journey, right? Sonali, can you share that link? Or maybe Sarvesh, if you have that, can you post it in the chat?
Yeah, I'm sending in a minute. Yeah, I sent you.
Sent where? Can you ping it on the messages here so that people will access?
Just a second.
In fact, let me invite suggestions from people here on the Google Meet chat only. Let's forget the links. Uh, to all the audience, I've talked about typical lending journey. Where do you think technology has a role to play? Right? If you could take a minute, help me understand what is your idea where technology have played a role, in removing the inefficiencies that we just talked about, in which parts of the journeys, right? And how. Let's give it 1 minute. I would request maybe at least 5 or 10 responses from the people here, and then we'll move forward. Perfect. Automation of ID verification, that's a good one. Any other responses?
Guys, just post the response. So you can be wrong. You're not an expert. So try to figure out whatever you have heard. You can just say what you think. There's no, if you're wrong, you can be corrected. But if you don't try, that's something will not get us anywhere. Let's try.
Also requesting everyone to please switch on their cameras because Tushar sir is taking his personal time out for explaining us. And also please feel free to talk and discuss anything that you feel. Okay.
So the question, I'll repeat the question. So the question was very simple. How technology can help us in handling these challenges, or where technology can play the role of solving the problem that we are facing in lending?
Yeah, improved risk assessment is also a very nice guess. Let's wait for 2 more responses before I move forward.
I think, Tushar, what has happened, students need some, so they don't want to be wrong and all that. So maybe that push
Fine.
is required. That's why I'm just saying things.
No, that's fine. That's fine. I completely agree. In fact, the 2 responses I've got so far are just bang on. Checking for high CIBIL scores. Yes, that's nice. I'll wait for 1 more response and then I'll move forward.
So even Tushar, he's an expert and he's saying ki these questions or these responses are great. So try and you will hit the target. So just try, and of course Tushar will explain all these things. And yeah. Okay. I'll shut up. Tushar, you
can try to attract people need to start with credit based on FD. Perfect. I like Sanjay's response to start with credit card based on FD. That's a good response. I like that. Though it's not how tech is solving the problems. Basically, what products we are kind of creating on top of the problems that have been solved. Awesome. Now I'm getting responses. Documents verification. That's nice. Better customer experience. Good. Cool. We'll move forward. I think people are getting the sense of things now. Great. Yeah. We'll move forward. Yes. Perfect. Cool. So key technologies driving change, right? So what are the technologies that have come so far that have kind of enabled us to move from the traditional lending process and move to a much more automated tech backed process? At the root of these, it's a very simple technology, REST APIs, right? Just cannot impress upon it much. REST APIs, the API infrastructure has enabled data to be exchanged from one party, from one source to the other source, where from the information requested to the information provider, right? Everything that has happened is on top of it, right? Digital payment ecosystems, RBI has done some great work, NPC has done some great work here, simplified loan disbursements directly to UPI, IMPS, NEFT, RTGS, setting up of repayments, amazing work done here, right? And obviously the key core buzzwords, AI and ML. where you have enabled automated decision making, credit scoring, fast, improved credit scoring, and fraud detections, which is kind of self-learning fraud detections here, depending upon your previous historical experiences. Right? Let's move forward. Okay. So this is basically where I talk about what exactly and where exactly the previous advancements have come into play. Right. This is where the entire things comes together. Let's start from the beginning. We said, okay, the person goes to the bank, the borrower goes to the bank and fills out an application form. Right. This is where NBFCs, digital entities, third-party platforms have done great jobs, right? There are apps, there are mobile apps, there are application forms available on web, right? So borrower need not visit the bank; they can fill up the forms directly from the comfort of their home. And we are right now there are NBFCs which are requesting these forms for processing loans up to like 50 lakhs, 1 crore also, right? uh, Borrower's credit score is readily available via bureaus, right? So where I was talking about where you need to understand what is the paying capability of a person, this is where it comes, right? So you have 4 bureaus identified by RBI, where any lender keeps on adding historical data, repayment behavior of the person, and that helps the other lender quickly assess the capability of the person or what kind of a risk or what kind of exposure that the lender wants to take on that person, right? Borrower identification. Somebody wrote on the chat also, bang on. So this is where the government of India has done some beautiful work, right? Just look up for it after this thing. You would have heard of JAM Trinity, Jandan Aadhaar Mobile, right? So Aadhaars, we have like 138 crore Aadhaars right now, right? We have 20 crore bank accounts, right? So it becomes very easy to understand what is the identity of that person, right? And if that person, that Aadhaar is linked with the bank account for that person, then understand the repayment capability of the person also, right? If the person has a bank account, a small or a medium enterprise has a bank account, they would likely be putting all that money over there, right? And this is, I'm talking about, let's say, sabji wala, right? If that person has a bank account, right? I would know how much money, because another amazing work is, let's say that sabji wala has a UPI, right? I would know, and then that UPI, whatever money comes from that UPI comes directly to the bank account, right? So that sabji wala can go to a bank, show up his financial statement, a bank account statement, and say, "Boss, I have some money. You can look at this data, and you can give me loan based on the money that I'm getting." Right? He doesn't need to maintain any books and ledgers bahi khata, which banks would not trust. Right? The other thing is ITR data, GST data, business registration documents. All these are available online. So you have third-party vendors, for example, Perfios, right? Just look about it later, or Lentra or other vendors. They have established API conduits, right, with these information providers, which are central data warehouses of the bank of the government, and then we are able to fetch ITR data, GST data from these central warehouses, data warehouses. So let's say if I have a small business, I would be if and I go to a bank to give me let's say a financing for supply for my daily work. Right? I want to purchase some raw material, which is called supply chain financing. I want to purchase some raw material, and I want bank to help me give money for that. The bank can quickly go to the GST portal and say, "Okay, हाँ, Tushar has a company, and they are really doing good. I can afford to give some money, lend out some money to Tushar, because I know in a month or 2 months time he would be able to pay it back." Right? Uh, let's go to the next slide. No, the previous one, please. Another Another master stroke by RBI, which I would say, is uh, uh, so RBI recently rolled out of an act called DPDP Act, which is basically Data Protection Act, which is based on DAPA framework. I'm putting out these key terms so that once you guys have the slide, just go and look out for these frameworks. This will be very helpful for you if you are looking into jobs into fintech industry later on, right? So a byproduct of DAPA framework is account aggregator. What does account aggregator do? Right. So when I talked about that, the bank wants account statement for the customer to analyze whether he'll be able to pay or not. Right. So what account aggregator does, if let's say Sarvesh has a bank account in Yes Bank, right, and he goes to HDFC and asks for a loan, right? HDFC will say, boss, you bring your bank account statement to me. Now, either Sarvesh, who let's say is residing in Bangalore, has bank account, let's say in Mumbai, previous, let's talk about 5 years back, right? He would go to fly to Mumbai or get his bank account statement, or go to the nearest Yes Bank branch, get the bank statement, get it verified, etc., etc. And then bank will also take the bank statement and say, okay, boss, I need to go, and then they'll send their own risk agent to say, okay, whether this bank statement is actually true or not, right? Multiple processes and very cost effective. So what RBI has done is they have built an entity called account aggregator. So this account aggregator does all this framework, does all this thing. So Yes Bank, HDFC will send a request to Yes Bank via an API, get an information back, consume it, and underwrite the loan on it, right? What DAPA framework brings in this? DAPA framework brings consent, right? Consent which is timed, right? So if HDFC is asking for bank account statement, they will send a message to Sarvesh, where Sarvesh has to provide a consent that this account statement will only and only be used by HDFC for only and only underwriting the loan that he is requesting for only 15 days. That's the beauty of the DAPA framework and the account aggregators that have been brought in, right? So you are minimizing the entire risk of fraudulent practices or duplicate bank statements here, right? Then is underwriting models. So this basically is a service now, right? So let's say I am a small lender, I want to set up a shop. I'm not aware of what kind of basic default checks should I do, right? I can quickly go to underwriting model. They are available to an entity who's providing underwriting model to me. I can tweak it based on my understanding on what parameters I want to run. And I can put that in a business rule engine that I decide. So when Sarvesh will come to me, I'll run that model quickly and say, okay, this profile looks good, and this is the exposure I can have for this person, right? The next three things: NACH framework, UPI mandates, and setting up financial liens, right? This is where you enable the lenders to get the money back, okay? Because till now what we have talked about is we want to risk assess the person, and then we want to understand how do we underwrite that person. Now, how do we get the money back, right? So here, the current evolution of by NPCI is the NACH presentation, where you sign an e-mandate, and there also we have moved away from physical NACHs, right? Around pre-COVID era, we used to have physical NACHs where, let's say, I'll take Abhishek's name now. Abhishek wanted to get a loan, right? And he would then, let's say, two-wheeler loan. He would go to the dealer, and once the loan has been financed, right, it has been sanctioned, he would go back again and say, and somebody would fill out a form with him saying, I authorize, let's say, Yes Bank to deduct 10,000 rupees per month as an EMI from my account. That was physical NACH. Now he doesn't even want to do that. He doesn't need to do that also. He'll get a link on his mobile saying, okay, set up an e-mandate where he'll just authorize, which could be based on Aadhaar or could be based on OTP. And he'll authorize Yes Bank to set up that instrument, repayment instrument. And what this repayment instrument does, it goes on that desired date, it goes automatically deducts the money from Abhishek's account and gives it back to Yes Bank account, right? And if it does not do that, If the money is not present, then obviously there are repercussions. But then that's between Abhishek and Yes Bank to handle those. Right? Similarly, UPI mandates, right? UPI mandates, they provide that ease from your Google Pay app, right? You don't even need to open up your bank account or do any such sort of thing. For example, Netflix, right, or Google or any other subscription service or Hotstar, right? They are actually moving towards UPI mandates. When you subscribe for Netflix, let's say for 499 ka pack, they send a UPI mandate request to your Google Pay, where you can just approve and automatically money gets deducted from there. The last one is very interesting, where you set up financial liens, right? So let's say I am a restaurant owner with Zomato, registered with Zomato. I go to Zomato and say, boss, I need a loan. Zomato will say, okay, I have a banking partner, Yes Bank. You go and take a loan from them. I give all the data, whatever I have, or basically Zomato will give all my data, whatever transactions I have done with Zomato, to the bank, and the bank will say, okay, this person is doing so much money, so much amount of business on Zomato. He would be a good person, right? But then how do I get my money back, right? Because he may fudge his data or whatever, right? Even NPCI, NACH, your UPI mandate, he may take this money from his bank account and put it in some other bank account. That instrument may fail. So now we have a system of financial lien where Zomato will get it signed by me. Okay, whatever money you will earn in a month or in a week or on a daily basis, the first right would be with the lender. Let's say I earn 1,000 rupees and my monthly installment comes out to be 500 rupees, right? So then bank will have the first right on that 1,000 rupees. So that 1,000 money will go to bank's account or an escrow account that we call. It will deduct 500 rupees from it and then send 500 rupees back to me, right? So I'm meeting my liabilities before I get that money back. So that's basically called a financial lien, right? Cool. I'll take a stop here, pause here. If you guys have any questions, let's answer those before we move to the next part of the presentation.
Guys, if you have any questions, please kindly unmute yourself and ask questions to sir. And also make it little bit interactive.
Okay, let's wait for 10 seconds. Opens only one bank and he can better open salary account in a bank and request for a loan. Yes. So this we are not talking about just salaried people. I'm talking about businesses also, right? And I may not want to take the loan from the very same bank because that bank's products may not necessarily align with my requirements, right? Let's say I have a bank account with Yes Bank and they give me a pricing of 10.95%, but I want it at 10.5%. I would go to HDFC. I'm in my rights. I'm very well allowed to do so. But then since my account is in Yes Bank, HDFC has to get money from Yes Bank. Right? Cool. We'll move forward then if no other questions. Sonali? Yeah. Cool. So I talked about the advancements. I talked about how the lending business processes of the history used to look like. Right? Let's talk about what models or product lines have actually come up with these advancements. Right? One thing is lending as a service. I briefly touched upon it when I gave Zomato example. I'll give another example here. Let's say for Flipkart, right? For Flipkart, let's say again, I'll take Sarvesh. I'm giving you a lot of things, Sarvesh, today. So Sarvesh is a reseller with Flipkart and he's doing good, right? But he wants to expand his business, which will inherently help Flipkart also to expand their gross monthly value. Right? Now, Sarvesh wants a loan. He approaches Flipkart, and Flipkart says, okay, I have, you fill in these details. I have 4 or 5 banks or lenders whom I've partnered with, right? You fill up these details, I'll send your data to those banks, and they'll give you the pricing, and you take up whatever pricing is suitable for you, right? There are platforms which are enabling this surface, right? So Flipkart need not uh, spend any amount of money in having this platform enabled, right? There are platforms which are providing lending as a service, which have plug and play application forms designed for Flipkart. They just put a button, right, on Flipkart's journey, have Sarvesh click on it, have Sarvesh fill up the details, send that data with API linkages to multiple banks, right? Where Flipkart basically can say, okay, if let's say lending that platform has 10 banks enabled, Flipkart can say, I want to do only business only with these 2 banks, right? So it will go to those 2 banks. Their business rule engines will work. They will give a yes or a no with a pricing that Sarvesh, I want to give 10.5, I want to give 11.5. That comes back to Sarvesh via SMS, right? And when Sarvesh agrees to it, it goes back to them or maybe to some other collection partner. There are third parties which specialize in setting up the NACH mandates, which we talked about, which directly interact with NPCI, because interacting with NPCI, setting up that linkage is also business or is a big, huge process in itself. Okay? So they interact with a third party partner, have Sarvesh ka NACH setup, take that NACH ka unique ID and give it back to the bank and to Flipkart person, right? Now the loan gets disbursed, and once Sarvesh starts payment to the bank, right, that bank keeps on sending regular information to Flipkart saying that Sarvesh is doing good, he is sending me money. And once, let's say, Sarvesh stops sending money, Flipkart can take an action on him, right? So this is the beauty of lending as a service by imbibing all that we talked before, right? Second that I want to pick up is co-lending. And these are just, I have picked up 3 or 4 examples that I found would be helpful to you guys. But there are other models and product lines also which are being developed as we speak. Co-lending is a collaborative business process. So let's say I am, let's say I am a bank. Let's take an example of HDFC per se or Yes Bank per se. So these banks have money, right? They have crores of money, thousands of crores of money. But why NBFCs came into picture, new non-banking financial companies, why they came into picture? Because these banks have friction in going forward and meeting to the clients. They don't have that muscle power. They don't want to spend that much money into getting more people onboarded who want to take loans. So these NBFCs does that for them. So the NBFC goes, talks to, let's say, Abhishek, onboards him, right? And then says, okay, great, I will give you a loan. And then gives, let's say, Abhishek's ask is 5 lakh rupees. So he'll give them 5 lakh rupees and then goes to the bank, to Yes Bank, and say, okay, boss, Abhishek has taken a 5 lakh rupee loan for me. Would you want to finance it? Right? So bank says, perfect, I would want to finance 4 lakh rupees of it. So in turn, because bank's cost of capital is the amount of money you have to spend to get that money, right? So bank's cost of capital is low because they don't need to necessarily advertise a lot to themselves. People by themselves come and give them money. So that's why bank's cost of capital is low, whereas NBFC needs to go to a bank, pay a premium, for, let's say 14% or 13% to get that same amount of money, right? So in that turn, Abhishek will get a blended rate, wherein let's say bank cost of capital is 8%, and NBFC's cost of capital is 11%. So Abhishek will get it at 9%, right? So all 3 parties are happy. NBFC is getting some money, is getting some installments at a lower cost. bank is able to give that money to Abhishek, and Abhishek is getting a blended rate which is lower than an NBFC. And this basically has been is prioritized by the government of India also, where they have RBI has given some priority sector lending. So the banks have to actually meet some targets on a monthly basis. Right? We'll go next. Cool. We'll talk about loan against securities. Somebody mentioned that they got a credit card based on on a FD, right? So this is similar to that. So this basically this basically enables a lender to give money based on some assets that somebody holds. Let's say Sarvesh has an insurance policy of 15 lakh rupees, which is due to mature in sometime soon, and he'll get that money, right? Or let's say he is avid investor in stock market and he has built up crores of wealth there, right? Sarvesh, I think you are happy with crores. So in that case, now Sarvesh can go to Bajaj Finance and say, okay, boss, I have this much amount of money, I need some loan. I have this much amount of wealth, I need some loan. Bajaj will say, okay, you give me your portfolio, you show me your portfolio, and you select which loan you want to take security against, loan against. He'll pick up one stock and say, okay, this will give me maximum benefit. You kind of give me a lien on that. So now, how tech will play a role in this, that Bajaj will be able to talk to the central agency, which is basically CAMS or KRA, right? And get that data for Sarvesh, say, okay, validate that Sarvesh actually has that loan, this is the amount of that loan, and then put a lien on that. So let's say Sarvesh, if he defaults, then they can go and sell off that stock, recover that money, and whatever remains, given to Sarvesh. Right? So that's a new model. That's basically it's an age-on model, but again, how tech is playing a role in that is very, very evident now. Right. Another thing is ONDC. So ONDC, it's a beautiful thing that RBI has, Indian government has come out with. ONDC is Open Network for Digital Commerce, right? Which basically enables everyone. So there's a huge term in lending industry is democratization, right? So it enables democratization for e-commerce. So basically anyone in this group can open an online store on this platform with very much ease, right? They can set up an online shop, they can receive orders, and once they receive orders, that comes to them and they can deliver the product. They don't need to set up a proper e-commerce platform or a website or anything like that. None of that nonsense. And then a lot of customer apps out there can subscribe to ONDC. And once they subscribe to ONDC, anybody using that app can have the full flavor of all the e-commerce stores present on the ONDC. That's a very basic picture, right? Now, how it is helping lending. So now let's say, again, Abhishek has set up a shop in ONDC, right? And he wants a working finance loan, right? So now that working finance loan, a lender can also embed themselves on the ONDC platform, and they would be able to access the transactions that Abhishek's business does, and get that entire idea and underwrite based on those transaction history. Right? Cool. I will take a pause here for any questions before I move forward. I think we are towards the end of the presentation now.
Guys, please shoot up your questions if you have any. And also, please keep your cameras on and make it a little bit interactive.
Cool. I'm guessing no questions till now. We'll move forward to the next slide then. Cool. So these are some buzzwords that I would want to leave with all of you. Search on these. Fascinating work being done by RBI in kind of again democratizing the entire loan journey from KYC enablement to understanding of business to ensuring that any new lender can set up a shop and with very ease get all the data points and have all the processes done. One thing that I would really want to emphasize on over here is CBDC. I'll spend 1 minute here on CBDC. CBDC is RBI's digital currency, right? It's basically based on blockchain, and the idea behind CBDC is great, right? So what CBDC envisions to do? So let's say I am a villager, village shop owner, right? I want to I'm a farmer. I want to take a loan for expanding my farming. I want to purchase some seeds, some pesticides, etc. Now, a small bank can give me a loan, a rural bank can give me a loan, but how would they know? Okay, I would spend that in seeds or pesticide. I'll not sway away to the next liquor shop and buy my fascinations there, right? How does bank control that? So this is where CBDC will come in play. So let's say I take a loan of 1 lakh rupees. So that 1 lakh will be earmarked to say that 1 lakh will only and only be spent for agricultural instruments or agricultural processes. I cannot spend it to any other thing, right? Once that is done, this gives two things. A, it gives it ensures that this guy, let's say the farmer or me, I spend it judiciously. Second, I use it to substantiate my income, right? If I use it to increase my income, the chances for me defaulting reduces. The bank is basically comfortable giving me that loan because now they see, okay, I use it on the purposes and then I will be able to pay it back because I have increased my income here. Right? Cool. So we'll move forward. And again, so I think this is one of the last few slides. Every coin has two sides, right? Obviously, if you were doing normal bank paper thing, right? Your privacy concerns were reduced. Obviously, you had paper, a lot of people could see them. But again, when you take these online, you kind of have all the breaches that we are looking at right now, all the data breaches that we have happening. So we need to have data privacies set up here, right? Then again, algorithms have bias that can creep in, and then regulatory hurdles where we need to ensure that we balance whatever we are innovating, we balance it with compliance and full compliance and regulations that RBI set up for. Cool. We'll move forward. I think people have started leaving. It's already 5 o'clock. So I'll skip on these slides. It's basically a success story of how, let's say for Credit B, who have used their technologies to have seamless onboarding and ensuring timely disbursements to the people who need the credit. Go to the next slide. And again, example of some the previous one. Example of some digital lending platform on what kind of things they are doing to ensure quick and faster delivery of loans and proper managed loans to the customers, the borrowers. Right? Cool. I think that should be the end of the presentation now.
Sir, I have one doubt. What do you feel about CRED that was founded by Kunal Shah? Yeah.
Feel in what terms? I feel very good things about it.
Okay, and in terms such as in disposal and the credit, like I've seen lots of reviews from people who are using that application, and difference between Sachin International and CRED matches a lot, and it has a lot of difference.
See, Sarvesh, I mean, I think it's a little broader question. So, CRED again is doing great. It's doing wonderful. I mean, all respect to Kunal Shah. they have they are into personal lending space, right? They brought in some hooks to the business where they understood. They brought all the HNIs basically. They brought all the people in who are credit card holders, and the people who are credit card holders are the cream de la cream of the country. Right?
Yeah.
Now they are able to give them easy access to credit because they know their financial history, they know their transaction history and all that, right? So they are doing really great there, and they have expanded their loan book like anything. Right? I think within three short years they were able to go to 4,000 CR. I'm not very sure of the that's how we are different from Sison. We are also into similar things. Sison International basically is a group company to a lot of subsidiaries. One of the subsidiaries is Sison India, Great Sison India, who also have expanded their books in a very short period with a huge margin, right? They're right now at around 10,000 CR plus, right? And they're doing beautifully, right? So they are again. So how each NBFC runs this business is subject to that, is subject to their own lending processes and everything, right? But the asset classes, the products they're dealing with are also very different.
Okay, so and one more thing, in credit cards, there are lots of points that are given for every spending purchases that I've made. And lots of people I have seen, like in credit card points, people are able to buy flight tickets and hotel can book hotel prices and with those credit card points. Is it that a loss for the bank or such like that?
नहीं यार in fact it's not a loss for the bank. It's basically it's a very different model altogether, right? You are getting points for some services you are utilizing on those platforms, right? It's basically a hook that the banks are giving to the customers to utilize their services. So credit cards itself, if you look into how credit cards work, uh, they're instruments that have potential to earn a lot of money to the banks because let's say the interest rates are relatively higher than lending over there. So you have interest rates of almost around 4% or so, in credit cards, right? And again, so you need people to kind of hooked up to these services, utilize it more, right? And then have their spends done on that. So these are the spends that the points that you get are a very small percentage of what the potential that credit card holds for as a earning instrument to the bank. And by the way, now these things are changing. A lot of freebies, a lot of points that the credit card companies used to give, or the banks used to give, they're actually rolling it back. Right? Those hooks have now kind of only very premium cards. The banks actually give those points.
Okay, okay. And one more last question. Sorry for troubling you. You might have heard of deep fake, right? Yeah. So lots of people impersonate themselves with deep fake images and like that as such, and they can do like with Aadhaar cards and with PAN cards. So with that, how can you identify or else detect that this person is doing something illegal during the KYC or for loan approvals?
Oh, that's a very interesting question, actually. So again, so
Yeah, sure. Just broaden it to a bigger level. So let's say you talked about the use of AI from the banking side. Let's discuss for 1 or 2 minutes what AI can do from the fraudster side and how our present system can help and how our systems are actually adapting for that. So what Sarvesh has asked is the same question, but I'm asking as a general question which everyone would be able to
got it.
understand from yours.
Got it. Got it. Cool. No, that's a good question. So what AI is doing, there again, I mean, it's doing a lot of new entities and a lot of new banks are using AI to help prevent fraud detections, right?
Yeah.
As simple as that. We started off around 2 years, 3 years back. People started off to understand whether the bank statement is forged or not, or the Aadhaar card, the photocopy of the Aadhaar card is forged or not, right?
Hmm.
Those simple use cases, easily detectable, right? With the advent of, let's say, deepfakes, right? You have VKYCs, video KYCs happening, right?
Hmm.
How do people, how now AI is trying to help that battle also, right? There's still some advancement that needs to be done, right? Where AI is trying to help that battle, where you, let's say, when you switch on your camera, if is there someone else face that appears over there, right? So again, I'll not have a very clear answer for you guys here because unfortunately I've not worked on that space, but that is where third party vendors like, again, Perfios I would name, or Hyperwords, these people are kind of trying to develop their technologies where they're able to find those defects and expand whatever they have been doing in document forging to real face forging, if I call it in that run.
Okay. Thank you so much.
Cool. Yeah, Balaji.
Hey, I just wanted to know more about CBDC. Right? You told me that it's both beneficial for the bank as well as the customer to spend the money on the right places. How well is it implemented at the moment?
Sorry.
How well is it implemented like across banks?
No, it's not implemented right now. It's still a proposed feature. RBI is still working on it, right? This is the use case that I presented is one of those proposed features, right? There are many other proposed features that we think would come into picture once this particular currency, digital currency, is fully implemented. Another thing that, another use case that they will solve is basically um, making the storage and uses of this currency, the operation, the opex around it, the expenditure around it, to be minimal. Because if you compare it to a physical currency, right, you have to spend the RBI has to spend a lot of money trying to upkeep that currency. With digital currency, that amount can be reduced. So that's another use case, right? So how RBI implements and in which use cases it implement is still to be seen, and will come in some time.
Cool, understood.
Cool. Any other questions? I think we are 10 minutes over time. Yeah, sorry.
I mean, I'll ask last question, right? I mean, it's an totally unrelated question. I mean, recently, I think PAN card 2.0 came up, right? Is there anything related to RBI or some good stuff linked to it? I mean, obviously, I didn't get the new one. So,
I unfortunately would not be able to answer you that. I'm not very abreast with PAN card 2.0, but that's a good point. Let me read back and come back to you on that.
cool.
Okay, so this seems to have come to an end.
Sure.
Once again, thank you so much for spending your time with us. It is a very it is a very good moment for us.
Thank you. Thanks, Abesh. Thanks the entire Calvium team, especially Sonali and Prakash for inviting me here as well. Thanks a lot, folks.
Thank you so much, sir.
Thank you so much.